2024 real estate market predictions can go both ways. They can either be right or wrong. Duh. But I'm going to cover what some of the main people and websites and companies have predicted is going to happen for 2024. And I'm going to give you my thoughts on them as a 7-year real estate agent. Here we go. I'm Kevin James Bond with Remax Real Estate Group, and I cover all things Colorado Springs real estate. If you have any questions about what is going on in Colorado Springs in particular, drop me a comment below or shoot me a direct message, and I'd be happy to answer those questions for you. First, we're going to take a look at Realtor.com's predictions for 2024. What we are in store for first is they are predicting a 14% drop in home inventory. So we had a 4.4% drop in inventory in 2022 and a 5.7% drop in home inventory in 2023. This is according to Realtor.com. These are national stats. This is not specific to Colorado Springs or Colorado. So we've had a drop in amount of homes for sale over the past couple of years, and they're predicting we're going to continue that trend, but even worse, like 3 times worse, a 14% drop in inventory, in home inventory for 2024. They are expecting the interest rates to come down just a squidge from where they're at now, and where they're at now, according to Optimal Blue, is at 6.999% for a 30-year conforming loan. And you can see we had the high point of, for a jumbo, it was at 8.232. But for a 30-year conforming, we were up at 7.8 on October 26th. And on October 20th, it was 7.776. Those were our high points in the past several months. Otherwise, we have been steadily coming down from that number. Compare a 30-year FHA is right now 6.829%. Over at Fred, you've got 7.03% for a 30-year fixed. Mortgage News Daily has you at 7.09 for a 30-year fixed. So we're either just under or just over 7% in interest rates right now. And Realtor.com is predicting that we're going to hit 6.8% for 2024. Not a huge woo wow or anything, but that's something. Compare that to 6.9% in 2023. At some point in 2023, we had 6.9%, which, I mean, we've got that right now, I guess, so that counts. And then in 2022, we had 5.3%. Are you ever going to see 5.3%? Realtor.com says if you do, you're not seeing it next year. Now, here's something fascinating. They're predicting that home prices overall are going to drop 1.7% next year. You had a slight gain, a 0.2% gain in home prices in 2023. You had a 10.3% gain in 2022. But they're predicting home prices, they'll come down, but they're not coming down drastically. Oh, a big fat 1.7%. Oh. And then rentals. The cost of rentals, the price of rentals will drop by 0.2%, even less than the cost of a home would drop. Rentals are not going to drop that much. There was a slight gain of 0.2% in 2023, same as home prices, and then almost the same as home prices in 2022. There was a 10.8% gain. So now you're seeing a 0.2% drop forecast. If you like this video, please click the like button, hit the subscribe button as well, click the bell if you'd like to stay in touch with more of this content that I create. Now, there is a caveat on that number of homes for sale dropping by 14% predicted, is that's only counting for existing homes for sale. They're not talking about new construction homes for sale. That's just existing homes. So as we get into, I'm just going to read this here. The good news is builders are expected to keep putting up homes. Those numbers aren't included in the housing inventory drop that Realtor.com predicts. Builders are anticipated to rev up construction about 0.4% over last year to just under 1 million new homes, and they're likely to continue to offer incentives such as mortgage rate buy-downs to close deals. So that mortgage rate buy-down, that just means that the more the builder is partnering with a preferred lender, and the preferred lender says, "Hey, we are offering a rate buy-down for the first 1 to 3 years. Your interest rate will be so much percent lower than it will be for the rest of the life of the loan. And they either do that by having you buy down points up front, or they increase the interest rate for the rest of the loan to compensate for lowering it for the first few years. Now, there is something that you can do as opposed to you having to tack on additional interest rate to the rest of your loan or having to buy points up front, is you get the seller to buy points up front. So when you're in the market looking for a property to buy, and you're in a for this particular housing market, at least in Colorado Springs, you're in a good position as a buyer to be able to either negotiate the price of the home down even further, particularly if it's been sitting on the market. Again, that doesn't work for all homes. Some homes, the homes that go quick, because there are homes that still go quick. It's not like all homes are just sitting languishing on the market, and that's not the case in Colorado Springs at all. It's typically between 30, 45 days that a home goes under contract. So it's still relatively quick. But if you run into a property that has been sitting for a while, it doesn't seem to have any action on it, and the seller's been dropping the price steadily, you can just go in and say, hey, I'll offer you X number of dollars underneath the current listing price that you've already got. Or you can say, hey, seller, will you pay or buy down my interest rate? So instead of you buying down your own interest rate for the first few years, you have your seller kick over $10,000, $20,000 to your lender to buy down the interest rate of your loan for the first few years. So, so that can be advantageous to you, or you could just say, hey, if the seller is going to cut down or give $10,000, $20,000 in concessions to my loan, why don't I just have them knock it off the price of the house itself? And you can certainly go that option too. Either way you want to do it, but that is an option. Now let's get into Redfin's predictions for 2024. Redfin is a little bit different. Redfin's first prediction is that home prices will fall by 1%, similar to what Realtor.com was saying. If you look at this chart here, they're showing that there was a little bit of a gain in the last two quarters of 2023, 2.6 and 3.0% gain in the median sales price of existing homes. Again, we're not talking about new construction because that's a whole separate thing of what are the new construction builders going to do. And the new construction builders, from what I'm seeing, are going to continue to build as they continue to get government incentives to build in certain places, like here in Colorado Springs. We have that. But they are continuing to build with the understanding that people are going to continue to buy here. It's just the ROI is not very forgiving for home builders, even with the incentives. So you're seeing a lot more. Like Aspen View Homes, for example, they are building new construction townhomes. They're between like 15 and 1800 square feet, and they're selling for 400 to 450K. And I went and toured those. I'll link to the video if you are interested in looking at what those models look like. But I was just amazed at how much space they packed 4 bedrooms, and packed isn't even the right word. They fit 4 bedrooms and storage space into 15 to 1800 square feet into a townhome. And so whoever designed the models for Aspen View Homes needs a raise because they made use of that space so well. But anyway, 2024 here in Redfin is we're predicting to have no gain or loss in sales prices. But that 1% they're predicting is going to come in the second and third quarter of 2024, where you're going to have a little bit of a drop. Now, why are they predicting that we're going to have a little bit of a drop? My guess is that that continues to be related to the high unaffordability of homes nationwide, as homes are still close to the highest in expense that they have ever been, combined with interest rates just being they're not really high. I mean, if you want to compare a 7% interest rate to a 16, 18% interest rate in the 80s, like comparatively speaking, the interest rates are not high, but the home prices were also not what they are now. In Colorado Springs, you're spending 500K for the average priced home, median sales price 425K. So you're spending a lot of money for a home, and then combine that with a higher interest rate that certainly is not the 2, 3, 4% that we were used to seeing just a few years ago. Yeah, it's a lot more expensive. It's $4,000, $5,000 a month to pay for such a home, to have a mortgage on that house. So not a lot of Americans can afford that, even with interest rates still coming down just a tad. They're predicting that we're going to have that 1% drop in home prices. Prediction two is that new listings are going to tick up. Oh, here they talk about the why home prices will fall because supply will rise more than demand. And nationwide, I can see that happening, specifically in Colorado Springs. I don't see that happening because the demand hasn't changed here. There is still a huge demand for housing in Colorado Springs. We are short homes. We're short homes everywhere, but in Colorado Springs, especially, we're short homes. People want to move here. You get a lot of people, predominantly people from Denver. If you want to talk about people moving from other places to Colorado Springs, it's mostly from Denver. And then you've also got people from California and Illinois. Those are the next two big ones. And then you've got other states as well. But because of that demand continues to be high. And supply, yeah, as the interest rates come down a bit, I'm anticipating you will get more supply. You will get more people listing their homes because they go, oh, the interest rates have come down a bit. I think now I can more afford to purchase a house in my chosen area than I could previously. Redfin specifically is referencing the reason that they are expecting supply will rise more than demand. They say, we've recently seen a double-digit annual increase in homeowners contacting Redfin for help selling their home, alongside a small drop in requests from prospective buyers. That makes sense. Listings will climb from 2023's record low as the mortgage rate lock-in effect eases. Nearly all mortgaged homeowners have a rate below the current level. Many are starting to accept that they won't see rates in the threes or fours anytime soon, and they want to sell before prices fall. Redfin's third prediction is that home sales will increase and end the year up 5%. In the first quarter, existing home sales will be on pace for 4.1 million total in 2024, up from an annual pace of 3.85 million in the fourth quarter of 2023. Sales will continue rising throughout the year. They'll be on pace for a total of 4.5 million by the fourth quarter. Home sales will speed up throughout 2024 as affordability improves and more homes hit the market. Overall, we expect 4.3 million sales in 2024, up 5% year over year. A crucial difference between 2024 and 2023 will be sales gaining momentum throughout the year instead of losing momentum. And they've got a nifty little chart down here where you can see the number of homes for sale in the last two quarters of 2023 are in that dark red. And then you've got that candy cane red for 2024 and their expectations of what home sales are going to do. And as they say, they're expecting that home sales are going to rise just a bit. I mean, it from four to upper half or upper 3 million to at 4.5 million by the end of 2024. We'll see what happens. Redfin is predicting that mortgage rates will decline, like Realtor.com, but that they're going to remain above 6%. Now, Realtor.com was saying 6.8%. Redfin predicts that they're going to fall to 6.6% by the end of 2024. But Realtor.com did say, hey, we're going to hit 6.8%, and then end of 2024, we're going to take another little dip. So this actually looks to be about the same prediction from the two of them. The Fed will likely keep interest rates at their current level at the start of the year, even though inflation is largely under control. But then they're likely to cut rates 2 or 3 times starting in the summer, which is why mortgage rates will decline as the year goes on. So again, the deep or the solid red, you can see 7.3% in 2024. And as we looked just a little bit ago, we could see that interest rates were hovering just under or over 7% as of now. And then You look at that candy cane red as you see interest rates start to come down a bit, just very slowly and gradually throughout 2024. This is not going to be any deep cuts. Home prices are not going to take deep cut slashes, and neither are interest rates, at least according to these two predictions. A semi-related prediction from Redfin is that there's going to be some changes coming to the real estate industry, and they are referencing the NAR lawsuit that is currently in progress right now. And I don't think I've covered that specifically on my channel. I have meant to, but I've also been watching the case unfold as it is very up in the air and nothing has been determined as of yet. And I would also caveat this with the fact that Redfin specifically left the NAR, the National Association of Realtors, once there was a scandal that came out regarding the then president Kenny Purcell with NAR, and then once the actual lawsuit came out against NAR and Keller Williams and Remax and Anywhere Real Estate Company, and then a few others. Remax settled, and the Anywhere company also settled, which, if you know about how lawsuits happen, the settlement does not necessarily indicate guilt. It just indicates that they want to get the F out of the lawsuit. And Keller Williams is still involved because they said, no, we're not settling, screw you. And NAR is, and Keller Williams, I'm assuming, are appealing the jury's decision that that these real estate companies are liable for colluding or conspiring with each other to keep a higher commission percentage. So the prediction from Redfin here is that this lawsuit is going to ultimately affect the real estate industry and how real estate agents either get paid or have to be a bit more transparent about how they get paid. Some buyers agents were advertising their services as free to their clients. They would say, "You don't owe me anything. You know, my services are free to you," and that wasn't necessarily true, and it's not true because the buyer agent, when you're purchasing a house, the buyer agent that you're working with is getting a commission from the seller. So the seller will typically cover the commission of both their own listing agent and the buyer's seller agent, the buyer's buyer agent. So part of the lawsuit was to make that clear that the buyer agent was not free, and it did come at a cost to the buyer client. It came in the cost of a higher sales price, technically, that the commissions were getting paid out of the seller's net from selling their house. And so if you did not have the buyer's agent, would you have paid less on the house ultimately, or would the seller have paid out less in fees to sell their property? And the answer is, of course, yes, the seller would have paid less in fees, but would that have necessarily made the house less expensive? That to me is very up in the air because just because the buyer agent is not involved does not mean that the seller has to go, oh, I'm going to start collectively, people selling their houses are going to start thinking of, oh, I'm going to start advertising my house less than what I wanted to sell it for because there's no buyer agent involved. That sounds ridiculous to me. So I don't see that as actually changing anything other than ultimately this is going to affect the buyer agent in that they need to be more transparent with their clients on how they are getting paid and making the public more aware of the ability to negotiate their commission with their own client or with their own agent. And you didn't really have that as the buyer. You didn't really have the option to negotiate how much you were paying your own agent because your agent was getting paid by the listing agent or by the seller. The seller would pay out a certain percentage in commission, and some of that would go to the listing agent and some of that would go to the buyer agent. But that was between the seller and the listing agent on what that total commission percentage was. If it was a commission at all, it could have just been a straight flat fee. But that was up to the seller and the listing agent to negotiate how much commission in total was going to be paid out. And then out of that, how much of that was going to go to the listing agent and how much of that was going to go to the buyer agent. So ultimately, what I see coming out of this lawsuit is that likely buyers will in the future have the ability to negotiate that with their own agent up front and say, this is the amount of money that I am willing to pay you as you take the negotiation into your own hands. Ultimately, how I see that working out, and the reason that buyers were not paying their own agents was predominantly to do with the fact that it was difficult for them to do that out of pocket. If you're going to pay a real estate agent to show you homes and write offers for you, do you want to pay that as an hourly cost with a retainer like you would with a lawyer? That's not really feasible for a lot of people to pay out of pocket for their agent. So that was why it made sense to have that cost come out of the sale of the property itself, because then you didn't have to have that upfront cost. But if we're going to change how that structure happens, then the way I see it moving forward, and this is its own real estate prediction, since Redfin brought it up, is that lenders are likely going to have that rolled into the cost of the loan now. Like, okay, if you want to use an agent as opposed to relying on the seller's agent who doesn't have your best interests in mind at all and has no fiduciary duty to you, they are free to screw you over. I mean, other than, making sure that they represent their client. They represent the seller. They do not represent you, so they don't owe you anything. And so it's doing yourself a disservice not to have your own agent. But when you have your own agent, your lender is likely going to roll in your agent's cost into the loan itself, which technically they were already doing, because you as the buyer, say you buy a 500K house, and the listing or the seller pays a percentage commission out of their proceeds to both agents. You're still paying a 500K loan, right? Minus your down payment. You're still paying for that loan. Well, now if the seller is not liable to pay the buyer's agent, where does the buyer agent make their money? Well, likely again, the lender is going to roll that into the loan, and it's going to be a part of your 500K. It's not going to change, is the point that I'm trying to make, is you still are going to have to pay your own agent. It's just going to be in your own loan costs, your total loan amount that you're paying. And I'm not seeing that sellers are going to drop their prices by 3% just because they're not paying out a second agent. They're going to sell their house according to what buyers are willing to pay for it. And I could be wrong. You could see home prices drop by 3% across the board if they no longer have to pay a second agent. Maybe that happens. We'll see. But if it doesn't, then home prices are still what they're at. Seller doesn't have to pay out as much, and you as the buyer roll that into the loan. So you buy a house for 500K and you go, okay, so I'm paying my own agent X percentage, whatever that is, and you add that on top of the 500K. So now your loan is going to be however many percent, 1, 2, 3% more expensive, depending on what the commission structure that you have with your own agent is. Now you've got to pay that on top of your loan, which is going to add to your monthly a little bit. And are people going to be okay with that? I don't know, but that's where the lawsuit has gone so far, and it's still up in the air. NAR is still looking to appeal the jury's verdict of, I think it was $1.8 billion, and none of that is getting paid out to anybody until this case is resolved, until the appellate court finishes its process. The other option is that buyer agents kind of go away in a sense, and you just start working with the listing agent who works with both the seller and the buyer, and that becomes more of a It can either become a dual agency sort of thing, which is illegal in many states, or it becomes I represent the seller and I treat the buyer as a customer, and you as the buyer don't have representation, which I feel is a dangerous path to go down. But again, we'll see how it turns out. The next prediction from Redfin is that renting will lose its stigma, meaning that you're going to have more people renting. Demand for large rental apartments and houses will climb as more young families embrace the renter lifestyle. We're already seeing signs that young people are redefining the American dream. Nearly 1 in 5 millennials who responded to a 2023 housing survey believe they'll never own a home. That's because they don't make enough money, and it's because people are not getting paid an affordable or a living wage. They're not getting paid enough to live. If you want people to work for a job, flipping burgers or doing some gig work or some hourly wage work, and it's work that needs to be done, right? But if you're not willing to pay them a living wage in order to do that work, then yeah, they don't have the money to buy a house, and they almost certainly don't have the money to rent either because the cost of rent is going up. And it says here, for some, renting is not a choice. Nearly half of these survey respondents said homes for sale are too expensive, and a similar share said they can't afford to save for a down payment. But others just prefer renting. 12% said they aren't interested in home ownership, and 7% said they don't want to put in the effort to maintain their own home. Fair. With prices so high, buying a home doesn't offer the same financial upside to young millennials and Gen Zers as it did baby boomers and Gen Xers. Rather than shelling out cash on agent fees, interest on a loan, property taxes, insurance, and maintenance, many will decide that renting and investing their money in other ways makes the most sense. We expect prices of large rental units to climb next year as supply fails to meet demand. However, there will be downward pressure on prices for smaller rentals because there are more of them and a backlog waiting to hit the market. Builders who have focused on building smaller apartment units since around 2019 will start to increase their investment in family friendly rental units. Their next prediction gets me. Biden has a housing problem which could hurt his re-election bid. Home prices are up more than 20% since Biden took office. That's a problem for his re-election bid. A recent poll found that 65% of voters disapprove of Biden's handling of the economy, with lack of housing affordability likely a major factor. Even though the overall economy is strong, high housing costs are making many Americans feel poor. That's especially true for young people who don't yet own a home. And even though affordability will become less of a problem in 2024, many Gen Z and millennial voters will be playing financial catch up for a while. Here's the second paragraph is where we start to actually tie into what this means. We expect President Biden and his opponents to make splashy housing policy proposals to try to lure voters who are unhappy with their economic prospects. Democrats are likely to focus on subsidizing down payments for first-time homebuyers, promoting inclusionary zoning, and funding housing vouchers, which are all popular with liberal voters. Republicans are more likely to focus on reducing regulations that limit development. We've also seen this in Colorado with Governor Polis putting reducing the property tax rate by 20% in order to get homeowners to have homeowners pay a little bit less on their property taxes per year. This predominantly positively affects seniors and anybody who's on a fixed income. I mean, it affects everybody who's a homeowner in that they are not having to pay as much in property taxes. But I would say that especially holds more weight with fixed income people. Now, according to Morgan Stanley, if we scroll down here a little bit, they are expecting prices to fall by 2% next year. So anywhere from 1 to 1.7 to 2% drop in home prices, according to whoever you talk to here. Coming over to Zillow's 2024 housing market predictions, if we scroll down here, they are expecting a 0.2% decrease in home values for 2024. Zillow's other major prediction is that more homes will hit the market as homeowners accept that mortgage rates aren't falling anytime soon. So, a stubbornly small pool of homes for sale has kept competition fairly high for most of this year, even with high costs limiting the number of active buyers. With mortgage rates rising over the past 2 years, homeowners have been reluctant to sell, opting instead to hold on to the ultra low interest rate on their current mortgage. Many of those homeowners will have their eye on a home with a bigger or no backyard, an extra or fewer bedroom, or in their preferred neighborhood across town. And Zillow predicts more of these homeowners will end their holdout for lower rates and go ahead with those moves. It really depends on if you can hold out. For somebody that bought their home and they bought it at a really good interest rate, 2.5, 3.5%, if they don't have to move, why would they? Unless they suddenly have a bunch more kids or they have more people that move into the house and then they need more of a bigger place to live, or let's say they get PCS'd out of wherever they're at. So here in Colorado Springs, you go and you get transferred to another base out of the city, out of state, and yeah, now you might have to sell, or you just rent that out and go buy something else in another state. And that's if you can afford to do that. And I think they actually mentioned that down here. The new starter home will be a single family rental. They do mention that down here. Though some improvement for home buying affordability is expected in 2024, many households will continue to be priced out. Demand and prices for single family rentals will continue to increase next year as families look for a more affordable option to enjoy amenities like a private backyard or a home that doesn't share a wall with neighbors. One possible path to more single family rental inventory is homeowners deciding to turn their home into an investment property and rent it out rather than selling it when they move. The ultra low mortgage rates held by many existing homeowners make it more likely that this option would pencil out. So there you go. You have more opportunity for single family homes to become rentals as current homeowners don't want to give up those low interest rates. And who can blame them? The bottom line is that you've got home prices which are, as predicted by several people here, not going to drop very much, 2% or less. And it's likely, well, it sounds like there is more consensus on it being in the 1% range of a home price drop. And again, that largely has to do with low supply and high demand. And real estate is, as you have heard many times, local. It is very specific to the market that you're in Colorado Springs, I am seeing high demand, continued high demand, and low supply. You've got home builders that are continually building new townhouses, new single family homes, and a few condos here and there. But ultimately, it is not enough to meet the demand that is here. So I'm not seeing home prices having a drastic decrease. Perhaps we do see that minor decrease in home prices in 2024. But for Colorado Springs in particular, I'm not actually holding out for that. I think we actually will still see increases in home prices. Might not be a huge amount. I'm not expecting a huge amount from that. But if the past couple of years has any data to give us, home prices have largely remained steady. This is a chart of the average and median sales prices in Colorado Springs from January 2022 all the way to the present. The green line is the average sales price, the blue line is the median sales price. And you'll notice that home prices had a little bit of a jump up during the summer months and then they came down a bit in the winter months. But year over year, uh, look at the home prices. They actually have not changed that much. You've seen maybe a slight increase in the average sales price and about the same, maybe a slight decrease even in the median sales price. But overall, it's very, very similar in terms of what home prices have been doing over the past couple of years. And since interest rates are not looking like they're going to be coming down drastically, they'll come down a bit. And that I do agree with Zillow's particular line of reasoning that when interest rates in coming down a little bit, you're going to see a lot more people who just kind of go, oh, yeah, I guess we're not going to get this huge decrease in interest rates like I was hoping for. So if we want to do something with buying or selling, I guess now is the time to do it before it starts getting crazy during the summertime. Or maybe you want to wait during the summertime to buy or sell property. But that's what I'm seeing. I'm not seeing that home prices are going to have this drastic decrease, not in Colorado Springs. And if we're looking at the past 2 years of data, maybe they're not going to do much of anything. They're going to come up a bit during the summertime, but then they're just going to go right back down. So if you don't sell during the summertime is likely when you're going to get top dollar for selling your property in 2024. And then if you wait until fall or wintertime, it's probably going to come right back down again. And it's just going to match what we've been seeing for the past 2 years in terms of overall prices. Those are the 2024 housing market predictions for nationally, and then as well as my insight on what this is likely going to do for Colorado Springs in particular. If you have any questions about these predictions, ideas, drop a comment down below. Let me know your thoughts. My name is Kevin James Bond with Remax Real Estate Group. Reach out to me if you are looking to buy or sell property in the Colorado Springs area, whether that's now or sometime next year. I'd be more than happy to help you with that. Thank you so much for watching, and I will see you in the next video.